Hello. Today, let us tackle this question together where we have been told Alan Abedi, a sole trader, does not maintain a complete set of accounting records. A summary of all his business transaction concerning receipts and payments for the year ended 30th September 2025 is given below. So here we've been provided the receipts and payments. The receipts on this side, which are basically the cash inflow into the business, and the payments on this side, which are basically the cash outflow from the business, okay? Then we've been given additional information, which includes the following balances for us at 30th September 2024, that is the prior period, and as well the balances as at 30th September 2025, okay? So you can see we have motor vehicles, office equipment, the trade receivables, trade payables, inventories, lighting and heating, owing, and we have prepaid insurance, okay? Then we've also been given another additional information, which is allowance for credit loss is provided at the rate of 5% on outstanding trade receivables. And then what is required of us is to prepare the statement of profit or loss for the year ended 30th September 2025, and also statement of financial position as at 30th September 2025. So first we are going to tackle this question, then we shall do the next in the next video. Okay, we shall do the statement of financial position in the next question. So first, for the statement of profit or loss, we look at the format that we use. Okay, the format for the statement of profit or loss, we write the name. In our case, is a sole trader, so we just write Alan Abedi, and then we write a statement of profit or loss, that is, we specify the specific statement that we're preparing and the period that we are preparing, which is the period ended 30th September 2025. Okay. Then always we start with the first section where we get the gross profit, where we first get our revenue. We first get our revenue, then we less our cost of sales, so that we'll be able to get our gross profit. Okay. And remember, our amount is in millions. Okay, so I've just indicated it here. Okay, so we are going to use the numbers as they are indicated. You can see that it's also indicated here. Okay, always don't if you can't remember this, then always write the number in full. If it is 177,600, if you can't remember to write this here, then you need to write here 177,600 million in full. Okay, so that you don't confuse. Okay, so the first thing is we look at revenue. So let us come to our worksheet here. We need to calculate our revenue. With the information given, how do we arrive at our revenue? So we have been told that receipt from trade receivables is 836,400, okay, during the period. So this is the amount of money that was received out of selling the goods, or if it is the services the Alan is providing, whichever. So, and because we have inventory, you can see we have inventory here. This is basically Alan is selling some goods. Okay, so receipt. So this is what Alan has received during the period. This is the amount of money he or she has received during the period, which is 836,400. Okay. But when you come here at the balances, you're going to see there is still a balance of trade receivables of amount 74,400. Okay, we as at 30th September 2025. This means as at 30th September 2025, we still had trade receivables from the sales that has happened of amount 74,400. That means this is also part of revenue that has been earned during the period, because you record something in the account receivable if you have earned that revenue. Okay, then record as at 30th September 2024, as the end of this period, there was a pending trade receivables of 67,200. What does that mean? That means in this receipt from trade receivables, you could be having money that was received that was covering this amount from the prior period. Remember, it was a trade receivable as at that period, and there is expectation for it to be paid. So this receipt that is from the customer, okay, could be to pay for this 67,200. So to be able to calculate the revenue during the period, we need to take these 836, which is the receipt during the period that is in relation to trade receivables. Okay, so 400. Then what do? We less trade receivables from the prior period, because even if this amount includes this amount, this is for the year 2024. This is revenue for the year 2024. It was earned in the previous period. But now we have a balance of 74,400, which is basically a receivable for 2025. It's just that it has not yet been paid. So basically our revenue will be the receipt during the period concerning trade receivables. We less the prior year period receivables, and then we add the current year balance of our trade receivables, because it has been earned. It's just that it has not been paid. Probably it will be in the receipt in the next period. Okay, so here we are going to have 843 600. Okay, so this is going to be our revenue. So let us look at cost of sales. Let us look at cost of sales. Cost of sales basically is usually opening balance of our inventory. Opening balance of our inventory. We include purchases during the period. We include purchases that we have done during the period, and then we less the closing balance. Yeah, let's indicate this is inventory. Okay, then we less closing balance of our inventory. Okay, so we have from the information given, you can see our closing balance is 73,200, and this is the closing balance as at 30th September 2024, and it is the opening balance for this period. So we have 75,600 as our opening balance, and we have 73,200 as our closing balance during the period. So what is our purchases? What is our purchases during the period? Our purchases, given when we look at the information given, we have been told there are trade payables. Trade payables is basically the things that you should the things that you bought from a supplier that you're taking to sell. Okay, for the goods that you've not paid for from the supplier. Now this time you're not, the receivables is when we are dealing with our customer, but now here we have our supplier and we have a trade receivable that happened. That is a payment to the supplier of amount 584,400. Okay, so let's first tackle purchases. So we are saying we have 584, but this is payment. This is payment to the supplier during the period that has happened, because there is that payment that has been recorded. But then when you look at our balances, you can see under trade payables, we have a closing balance of 32,400 from the previous period. So these payments will include this 32,400. Okay, they will include this 32,400, and this was for the previous period. This is not in the previous period. No, these are payables from the previous period. So what do? We less 32,400, and then we do what? We add our trade payables as at 30th September 2025, which is 36,000. Okay, so we come and add 36,000 to get our purchases. So we are going to get here 5,808 thousand. That is going to be our purchases. So our cost of sales will basically be our opening balance of inventory, which is 75,600 because this is the closing balance as at 30th September 2024, which is going to be our opening balance for year 2025. Okay, so here we're going to have 75,600. Then we add our purchases, which we have calculated to be 588,000. And then we are going to less our closing balance. We are going to less our closing balance of 73,200. 73,200. Okay, so basically here you can see our closing balance is 73,200 as at 30th September 2025. Okay, so this is going to give us 590,400. So basically this is our cost of sales. So up to this point we come fill it. What is our revenue? Our revenue is 843,600. And then our cost of sales is going to be 590,400. 590. Sorry, let's write it clearly. 590,400. So this, it's a less. We are lessing cost of sales to get our gross profit, which is going to be 253,200. Okay, so our gross profit is basically 843,600. We less 590,400. Okay, now the next part is looking at the expenses. Remember, previously I've mentioned when it comes to this section, we divide these expenses into selling and distribution expenses and administrative expenses. When it comes to selling and distribution expenses, these are expenses that are directly involved in the selling of the goods in this case. Okay, and when you look at our question, there is no point where they are specifically stating, okay, these wages and salaries are for maybe salespeople, or these mobile phone expenses are for making calls to the customers. You see, so it is hard for you to know whether this is a selling and distribution expense. Okay, so they are we are going to basically classify them as administrative expense because their nature is administrative, as we are going to look at them one by one. Okay, so you're going to list our administrative expenses, where you can see we have wages and salaries. When you look here, we have wages and salaries of 177,600. So we're going to indicate here 177,600. Remember, we usually take our gross profit and we less the expenses. That's how I am writing in brackets. Okay, then we have insurance. You can see here we have an insurance expense of 18,000. But you have to be keen, because if you look at the additional information down here, you can see there is a balance of prepaid insurance of 2,400. And in the prior period, there was a balance of 1,200. What does that mean when you have a prepaid insurance? It means from this 18,000 during the period, from this 18,000 during the period, you have 2,400 that is prepaid. That means it is for the next period. It is not as at 31st, as at 30th September 2025. 2,400 is for the next period. It is a prepayment. So this insurance, you can't say the insurance expense is 18. You can't just say it is 18,000, because from it, because this is just a cash payment. This is a payment, and it involves paying insurance up to the next period. So the first thing you have to do is you come and take that 18,000, and from it you can see there is a prepayment of 2,400. Yeah, 2,400. So we less 2,400. And then you ask yourself, from the prior period, you can see there is also a balance of 1,200. What does that mean? In the prior period, the amount that was paid, there was a prepayment now for the period 2025 of amount 1,200, which now is an expense to the current period of year 2025. Okay, so you have to add this 1,200. You have to add this 1,200. 1,200. Sorry, 1,200. So you're going to get 16,800. So basically what you've done here, you've taken the cash payment itself to the insurance, you have less the prepayment because this is going to be a cost in the next period. And then this is what is coming from the prior period as a prepayment for year 2025. That is why we are adding it, okay? So our expense, that is expense incurred during the period is 16,180. So that is what you're going to indicate here, okay? So you just don't transfer items anyhowly. You have to look at the balances and be able to do the end of year accounting adjustment so that you know what exactly is the expense during the period, okay? Then let us look at lighting and heating. So you can see here, lighting for during the period that lighting and heating payment was done of 7,200, okay? But when you look at our balances, we are being told lighting and heating owing, like we owe for this lighting and owing as at 30th September 2025 is 3,000. What does that mean? This thing has been used during the period, but it has not yet been paid. But is that not an expense that has been incurred? It is, okay? It's just that it is not part of this 7,200 because we are yet to pay. So the first thing we do for lighting and heating is we come and take the actual payment done. We add these 3,000. We had these 3,000. And when we look in the year 2024, you can see there was a owing from the previous period of amount 2,400. This means that this 7,200 that was paid was inclusive of an amount that was owed in the previous period. But is lighting and heating for the previous period an expense incurred in our current period? No. We only want to get the expense incurred in our current period, which is that is September 2025. So we have to less 2,400 because this is coming from the previous period. So we are going to have a lighting and heating expense of 7,800. So here we're going to less 7,800. Okay. Now let us move to the next expense. So we've done this. So printing and stationery, we have 2,400. Is there anything been added here on additional information? No. So our printing and stationery is 2,400, which we shall include here 2,400. Okay. Then mobile and phone expenses. Mobile and phone expenses, we have 1,200. There is no additional information about it here. So we're going to have less 1,200. Did I read the right thing? Mobile and phone here is 1,200. Then general expenses, we have 2,400. 2,400. Yeah. And then, okay. So up to that point, we have included wages, insurance, lighting, printing, mobile, general expenses. And then you can see here there is office equipment, drawings, and now balance carried forward. So when you look at additional information, there is motor vehicle book value and there's office equipment book value. Part of the end of period adjusting accounting entries is to make sure you account for depreciation expense in the correct period, okay? So we usually take the expense of an asset. It is divided into its useful value. So you're going to expense it in different accounting periods. So that is why we make sure we recognize a depreciation expense in every specific period once we calculate the depreciation. You can see here they have not given us information to calculate the depreciation because they have already indicated the book value. So sorry. So excuse me. So in the prior period, there was a book value balance of 33,600. And then in this period, we have 25,200. When we look at the equipment boards, we only, or any other assets, we only have office equipment board, okay? So it means they have not added any motor vehicles, but you can see a difference. What is causing the difference? The difference is that they have already done the depreciation. They have already accounted for depreciation. So us is to just make sure we know what is the depreciation for motor vehicles. And what do we do? What do we do? So for motor vehicles, our depreciation during the period, we just take the book value in the previous period, which is 33,600. Then we less our book value for the period, because book value is after deducting depreciation, okay? So we less that, and you're going to get 8,400. So this is basically going to be the depreciation expense during the period. So you come and indicate depreciation for motor vehicles as we less 8,400, okay? Now let us go to depreciation for office equipment. For office equipment, there is a change in that there is also been an addition during the period. There's been an addition during the period. So one of the changes that is causing this to come from 72,000 to 71,400, we also have to factor in there was something that was bought during the period of an amount 12,000, okay? And for us is to be able to get the depreciation. So what do we do? So we can take the balance is 72,000, right? In the previous period. So we take that balance, 72,000. We add our addition, because now we have added a new equipment of 12,000. And then now we are going to less the book value of the current period. We're going to less the book value of the current period, which is 71,400, okay? So the thing is, you don't forget to add also this 12,000, because there's been an added asset into this book value. So you need to cater for it as well. So our balance is going to be, the difference is going to be 12,600. So this is going to be the depreciation cost that has happened in the year ended 30th September 2025, okay? So we are going to come here and less 12,600, okay? Then, no, I just indicated it in the wrong place. So we're going to come in less 12,600 under depreciation for office equipment, okay? Then after including that, what else do we need to know? Remember, when you see drawings are what goes to the statement of changes in equity. It is not considered an expense. Same to dividends if we're dealing with a company. So you shouldn't be looking at it in any way, okay? Then we look at this comment where you've been told allowance for credit loss is provided at the rate of 5% on outstanding trade receivables. Recall, you always have to do an allowance at the end of the period. You have to do an allowance at the end of the period. So what do you usually do? We usually debit the bad debt expense account, and then we credit the allowance for credit loss. Allowance for credit loss is the same as allowance for bad debt or doubtful debt, okay? So the first thing we should ask ourselves is, this is a policy for this sole trader to have 5% on outstanding receivables. What was the allowance that was done in the previous period, that was allowed on the receivables on the previous period? You can see we have a trade receivables in the previous period of 67,200. So we are going to do 5% of 67,200. So we are going to get 3,360. And in the current period, we are going to have 5% of 74,400, which is going to be 3,720. So as at the end of year ended September 2024, this is what was allowed for. And you can see there isn't anywhere we are seeing a bad debt expense happening from the information given, okay? So there is still this allowance, okay, during the period where they debited bad debt expense, okay, and credited the allowance, which now is a contra asset account that will reduce this receivables account, okay, allowance for credit loss, okay. So before we do the accounting adjustment at the end of that year, September 2024, we already have an allowance of 3360, okay? And we want to have an allowance of 3720 during this period. So what do we do? Because we already have this balance of 3360, we only make an adjustment for the difference. We only make an adjustment for the difference. So what do? We take 3720, we less 3360, which we get 360. So basically we are going to debit bad debt expense of an amount of 360, and then we are going to credit now allowance for bad debt an amount of 360. If you don't understand this, I've done a previous videos on bad debt and allowance for credit losses. You can refer to that, then you will easily understand what we are doing here. So we will have to account for our bad debt expense during the period, an amount of 360, okay? So this is, we have included all the expenses during the period, depending on what we had been given. And we are going to sum them, and we are going to get a total expense of 229,560. So what is going to be our profit for the year? Our profit for the year is going to be gross profit, we less the total expenses, which is 229, and we are going to get 23 seats 40 million. We're going to get 23 seats 40 million as our profit for the year. Okay, so for this question is for you to make sure you understand the concept. Given the information that we've been given, you need to understand the concept so that from it you're able to pick the required you're able to interpret this into the statement of profit or loss. Okay, so we will tackle statement of financial position in the next video.